morning. Today we are going to continue with our chapter Objectives of Financial Management. What the purpose? What are the main objectives? Why financial management is so important? These are the topics for the day. See, the main objective of a financial management, if you want to say in a one line, in a one word, you can say maximization of the owner's economic welfare. We want to give wealth to our investors. We want to upgrade their financial strength. We want to see that our investors should feel satisfied that wherever I have invested my money, I am so grateful that my value of my investment is growing. This thing to be done in a particularly two aspect. One aspect to be say objective of profit maximization. Profit means a short term. Profit means annual return. Profit means what exactly you are doing in 12 months and what you are earning. Second, the same thing can be done by objective of wealth maximization. It is going to be actual growth. It is going to be actual increase in the share price. It is going to be a long term. So how these two objectives are to be attended? Let us see first, that is profit of maximization, objective of our profit maximization. This is the first main purpose of an financial management. How you can understand this particular objective? Number one, that dividend is to be distributed more to the investors, to the shareholder. Why people are buying equity? Because they want to take risk of getting more profit as well as sometime even the less profit it may possible. So they want a change. They don't want stable and regular income. They want to take a chance of appreciation. So as much as possible, give more dividend so that interest of investor can be maintained in the company's investment. The second is only profitable project are to be taken. If you want to earn profit, if you want to give more dividend, how it is possible? See to it that whatever projects you are taking are necessarily be the profitable projects. You have to have that much vision to find out which is worth taking and which is not to be taken as a project for the year. Then it should be possible with the help of less expenses. The another way of increase your profit is decrease your expense. When your expenses are properly controlled by the financial managers and by the financial management, automatically it leads to the profit and you can give more distribution of the profit to the investors. Next is that is the short term objective. Whatever profit objective you are talking about is a short term, yearly. It is concerned to a one financial year. This year profit going to be different than the next year or maybe than the previous year. So you are talking about a short term purpose, short term objective. That what refers to the profit maximization. Do something by which you can give more to your investor. Now the second is objective of wealth maximization. You have to generate wealth. You have to give appreciation in the share price of your investors. This wealth can be measured by the net present value of shares. What is the present value of shares? The formula to calculate the net present value is the present value of wealth minus investment required. Whatever the value today you have and what you have invested once upon a time, what is the difference that gives you the net present value of your shares? More the present value of shares, more the wealth generated. Less the present value, then say that it is a less wealth generated. So always the investors are interested in knowing the net present value of shares, how much gain possible or what company has done in these many years of their business activity. That is always measured by investor. Next, that it is a concept of cash flow. If you want to keep the wealth maximization, you have to maintain proper cash flow. You have to have a proper coming of cash and going of cash, and proper activities has to be done. So this is a tool by which you can maintain your wealth maximization. The next is that wealth of the shareholder need to be increased. Then and then only you can say that your business is attaining wealth maximization. The shares which you have issued at 10 rupee, today the market price is 4050 rupee, then you can say a major change in the wealth. The investor has invested just 10 rupee, today he is getting 4050 rupee. For that means there is a sustainable increase in the wealth of that shareholder. This particular object is a long term. Profit is a short term, while the wealth is a long term. Here, increase in the share price is the barometer to judge the wealth maximization. How the investor wealth increase? By, you may have given the bonus shares. You may have given the shares at a in the form of a buyback. You are giving opportunity to give their money, return them back. So in this manner, the wealth of the shareholders' price must increase, and bonus shares are issued, other shares are be given, gift shares are be given. Like that, you keep on increasing the number of shares in unit form, as well as the price going to be more. So it generates the wealth of the investors. Here, now we can understand the importance of the financial management. Why this particular branch of management is so important. The first point is here the estimation of the financial need. The first task this management is doing is the estimation. How much finance exactly business need? This work is to be done by financial management, by the financial department. Here you have to consider long-term need as well as short-term need. Total finance what you require must be calculated first properly by considering all the elements of finance, by considering all the aspects and the need of business. Second is, after calculating, you have to acquiring the finance at a minimum cost. Cost of raising finance need to be considered. And with a minimum cost, you have to collect that finance from the market. This work is to be done. The planning and controlling for the economic utilization of finance. Use of finance to be done economically. Always open your eyes and keep a watch that whether any wastages are there to be controlled. Any lavish spending are there to be controlled. So whatever finance you have to be utilized economically. Distribution of among the department. When you distribute the finance among the various departments, see to it their needs. You cannot give finance equally to all the departments. Few departments require more. For an example, purchase department need more finance as compared to, you say, administrative department. Look the expense in which they have to spend. Accordingly, you have to distribute, allocate the finance in our annual budget. Next is that is the maintaining liquidity. The most important aspect, cash on hand. You have to have a sufficient cash on hand. Then only you can run your business smoothly. There should not be any problem of purchase of raw material or of a payment of salary or the payment to the creditors. If any such disturbances are there, it means your credit worthiness in the market going to be suffered. So here, liquidity to maintain that, use the technique of the cash flow statement. Have to have a cash budget for you and maintain the proper cash on hand so that never you feel that you are in difficulty from cash point of view. Next is that is distribution of income. After a hard work you have earned profit. That profit to be distributed among the as a dividend, as well as you have to keep for the future also. So the distribution of income to be done with a proper dividend policy. It should not be the year in which more profit means let us give the whole all to the shareholder. We don't know, next year there may be a less profit. So equal dividend distribution policy to be maintained, or the range of distribution of dividend to be maintained. So dividend policy has to be taken care of. How much to be reinvested, the profit, that also to be considered, because the wealth you can generate by reinvestment. Everything what you have earned you will spend today and today. What will happen tomorrow when economy may face difficulties? So keep something aside also. Next is management of the current asset. The current assets we have, which are the current assets? Cash, debtor, stock, marketable securities and the bank balance. All current assets should be sufficient enough so that business feel that confidence is there. Lockdown may come due to COVID-19. It doesn't mean that such a big business, such a big empire going to be in trouble. You have that much cash, sufficient asset, so that 3 months of lockdown not going to trouble business. Your sustainability has to be maintained properly. Financial decisions are to be taken. Financial decision in respect of capital budget, in respect of dividend policy, in respect of reinvestment of profit, and proper coordination to be maintained among the various departments in the issue of finance. The next you can say that raising credit of the business. Creditability is the most important aspect. Without credit in market, no business can survive. So your creditability, your credit worthiness always to be maintained. So here, how can you maintain this? Pay proper salary to your employees, give proper rise to them in their salaries so they are satisfied, they work more, they earn more, and ultimately you can give more to your investors. So employees are one of the important factor of production. Next is creditors payment. You have to make the payment to creditors on time so that there won't be a rumor in market regarding our financial position. And the last, development of business to be done. The development is possible when you have sufficient cash on hand, when you have sufficient funds for the business. This is the manner in which you can understand the objectives of financial management. Thank you.